That being said, let's just take a look at how the markets are reacting to the Fed's decision. Seems like all Asian markets are on the rise. Japan stocks are continuing their winning run, leaving other markets in the dust. The Bank of Japan is kicking off its two-day monetary policy meeting today. Expectations are that the bulls could gain more steam if the central bank sticks to its ultra-easy monetary policy. India's Nifty 50, that's another index to watch out for. The Indian benchmark closed at its highest levels in 2023 in the previous trading session. Market watchers are of the view that favorable macros could push the Indian index to its highest ever levels within the next few sessions. Overnight in the United States, the three major indices ended mixed with the Fed announcement, with the S&P 500 closing flat, the Nasdaq Composite continuing its bull run thanks to a prolonged rally in the big tech stocks. On the oil markets now, oil prices fell after the US Federal Reserve projected more interest rate hikes this year, worrying markets about demand. Just hours after government data showed an unexpected large build on US crude oil stocks here. Higher interest rates strengthened the dollar, making commodities denominated in the US currency more expensive for holders of other currencies. That also reduces demand for the hot commodity, which is why Brent is down close to $2 from its previous close. The global oil benchmark now trades below $75 per barrel. Analysts have also downgraded their oil prices projections for the rest of the year. JP Morgan now expects Brent to average around $81 per barrel for 2023. That is a 10% revision from its previous forecast of $90. On to precious metals now. Gold prices paired gains after the US Federal Reserve's announcement, but analysts remain bullish on the bullion. A rise in interest rates in the near term that could give investors the cost of opportunity to hold the non-yielding metal. But the market sentiment, that seems to be risk on at the moment, and precious metals are losing their shine to equities in the short term. Gold, silver, platinum and palladium are all down but are holding on to their support levels comfortably. That's not the case for cryptos, though. All cryptos are trading below their crucial support levels following the Fed's announcement. Historically, cryptos have lost value when the Fed's stance is hawkish, but a pause in rate hikes have not helped digital assets rally this time. Bitcoin is trading just around $25,000 levels. Any dip beyond this could lead to more selling pressure. And now to talk more about this, we're joined by Jen Krishna, Chief Executive Officer, Foundation for Advancing Science and Technology, former CEO of UK-India Business Council. He's joining us live from New Delhi. Thank you so much for joining us on this broadcast, sir.
Pleasure.
So what do you make of the Fed's decision?
See, fundamentally, I see, after 15 months of successive hikes, it's more of a balancing act. But, it was clearly announced, it is just a skip rather than a pause. And two more hikes have been talked about in this calendar year itself, So let's understand, essentially, this Fed rate adjustments have been a measure to counter the inflation in the US. But let's look at what caused this inflation. There was a higher demand with the industry's relative inability to match the delivery, kind of a thing, and that made the prices soar. So I think the effort in the last 15 months has been to break this, and by hiking the rates. Of course, this time it has not been hiked. The idea is to cool off the demand and by making it more expensive to borrow. So I think this time, the same rate in the band of 5 to 5.25% has been retained, largely because there's also it's also to give the industry more time to absorb and deliver, and also if you raise it beyond a point too much, then there's also a risk of pushing the economy towards a recession. So I think it's more of a balancing act to my mind, and two more hikes this year. And next year, mid next year, we would expect, or early next year also, it's possible that some reduction may happen. And then by the year of 2014, my guess is it would stabilize at about 4%, then 3% by end of 2025. And long term, eventually, it would stabilize at 2.5%. That's my take on.
Right, so that being said, so how are you reading this decision and mood at the moment? What does this mean for the financial markets?
Yeah, so financial. Let's understand first of all, any change in the in the Fed interest rate. It takes almost an year before its impact on economy is felt. There's always a phase lag. But the fact is, stock markets don't wait that long, and their reactions are very immediate. So it happened in midnight, and this is early morning in India. But from whatever I could watch in the US, I think there's been a mixed reaction. If you look at the S&P 500, it went up by 0.1%. If you look at Dow Jones Industrial Average, that went down, ironically, by 0.7%. And Nasdaq Composite, it went up by 0.4%. So I essentially feel that it will not have any major impact. If at all there would be, it would be slight upward push to the stock market. And because I mean this maintaining the same level of 5 to 5.2% essentially means that interest on credit cards will not change, interest on loans and borrowings will not change, and savings bank interest would also remain the same. So I don't see any major ups and downs in the stock market because of this being a skip interest hike decision, rather than a pause, as I said earlier.
All right. Well, sir, thank you so much for joining us with your insights on this.
Pleasure.
WION is now available in your country. Download the app now. Get all the news on the move.